Hello everybody, welcome back. So some really interesting stuff going on with Bitcoin today. Very encouraging, in fact. Could be potentially really bullish. So first of all, a few days ago I was saying, look, I'm going to entertain the idea that a bear market could be in play because we're closing below the green 50 exponential moving average on the weekly, and every day that we're below there does lend itself to the concept that we're in a bear market. But then I did follow up with that video to say that in previous bull markets, as in the years past, this green 50 exponential has shown us that we only close below there when it is bear market territory. So this is 2012 into 2013. We've tested it a few times, but when you started to break down below it, it was a bear market consolidation and accumulation back down at the 200. Then finally broke above it again. We rode it all the way up to the bubble pop in 2017 into 18, and then that was it, and we closed below it and it was a bear market. But in this last cycle that's taken place, every year that's gone by, we have actually closed below it, and it's not been a bear market. We have closed below it, so it's different, a different way to look at this. This is a different bull market altogether. It's different in a lot of ways. It's different in the facilities of how to play crypto. I mean, derivatives are much more of a common thing now. That they've never really been a thing in the past bull markets. They were towards the end of the last one, but ones going by, prior to that, they weren't really. There's a lot of differences. There's a lot of differences in the way that Bitcoin is traded. And so, the chart represents a different style of trading. So maybe it was shorts piling on, sort of forcing it below more comfortable areas that it was never really able to break below before. But 2019, we had our big move up, and we closed below the green 50 exponential for almost 2 months. Broke above it into 2020. Coronavirus broke down below it again. 2020. So 2019, 2020. 2021 as of last week, we closed below it, and we are moving up to it right now, and currently being rejected from it. So obviously the closure of this candle takes place tomorrow, and I would like to see us close above it. I don't want to see us getting rejected from it, because it's those sort of moves that have previously, in cycles gone by, said it's potential bear market time. However, this cycle so far, we have spent time below it each year and recovered from it, but we don't want to be closing below it. Anyway, let's go to the daily where things start to get really interesting. So this is that's the 4 hourly. So we'll show you on the daily first of all. There's some really bullish looking really bullish things going on here, but it's only really just started to happen over the last 24 hours. So first of all, let's talk about the descending trend. So we've got this descending wedge formation. It's always been something that we've been looking at, I suppose, for the last week or two maybe. These trends, these formations are bullish when they break out, and at the moment we have broken out of it. So we've been rejected, supported, rejected all this way, and now finally broken out of it. So now this trend has been broken out of. It lends itself to the idea that we're going to start to move up. Doesn't mean we're going to go straight to the moon, but we're out of this descending trend, which means that, okay, we should start to get some upside at this point now. But at the same time, we've got all these moving averages above us. We've got lots of resistance above us, and so each one of these areas of resistance, we have to expect a rejection from, and then who knows where we come down to. Hopefully we will start to flip these previous levels of support, resistance to support. At the moment we're above the center of the Bollinger Band. On the daily we're above the 10 exponential. We're also above the $33,000 zone, which actually was a breakdown point and rejection point. Now we've cleared that, and hopefully that will flip again, and we'll be back to the inside range, a range that this technically accumulation, or should I say hopefully the accumulation phase that we've been in all this time, and then we can get back into there and play within that zone again, and hopefully we can break out of there at 41,000. That's not going to happen immediately. We're still death crossed on the simple moving averages over here, death crossed on the exponential moving averages here, but still we've broken out of a descending trend, which typically lends itself to a bullish move. Now, this is one of the more interesting components. We've had bearish divergence on this RSI since January, where I honestly felt like there was a peak. We moved into altcoins because it was the obvious thing to do. But if we go over to the money flow index on the weekly, there's a peak here 2017, peak here 2019, peak here 2021. These usually represent the absolute tops, and I suppose technically that was the top. The difference is that the altcoins were so oversold that there was like a resurgence in altcoins, and it caused an enormous alt season, as we can see over here. So this is where Bitcoin reached its top, and the money flow index on Bitcoin reached its top, and then money just flowed straight into altcoins. Anyway, that aside, that's where basically the bearish divergence started to take place, and as we can see on this RSI, it was going on throughout January, March, April, and then finally May it broke down. Now that trend line is still sort of relevant, and we've broken out of it now, so that shows a change in momentum. The momentum shift has moved to the up. This is only over the last 24 hours, so it's nothing to get too excited about. We also had bullish divergence taking place on this RSI also. So now we're broken out of this formation. This does lend itself to further momentum change to the up. So that's a good sign as well. So this finally has changed its behavior. Also has changed its behavior. So now what we need to think about is on the lower term timeframes, like the 4 hourly. Are we reclaiming moving averages of significance? And the 4 hourly is about the lowest time frame that I would hold relevant to any sizable change of direction. And at the moment we are above the 200 exponential moving average, which is great, because every day that we're above here, and I'm not suggesting we're going to stay above here for the moment, but if we can keep reclaiming it and prove it to be support, which is I suppose what's going on overnight basically, then it lends itself to encouraging these moving averages to come up to meet it and then cross it. And if we get this green 50 to cross that 200, that's a golden cross. And we all know what happened when the death cross took place over here. So first of all, this incoming death cross took place, but then a final death cross took place, and it just basically just dumped the market. Now I'm hoping that over the next month, and I'm saying month because when we're changing momentum, and it's a momentum shift after a 50 or 55% retrace, halving the amount of the asset's worth, things are going to be a little bit slow to start with, and that's fine. We don't want this to suddenly just shoot straight back up. I mean, it would be nice, but it's not going to be healthy. And I want to see these slowly reclaim and prove to be bullish each time, proving us that these moving averages here are all supports and they're not resistances any further. So this is all good. So we've got good signs on the daily, on the RSI, and that formation of the descending wedge. We've also reclaimed all these moving averages on the 4 hourly for the moment, and hopefully over the next few weeks we can prove that to be more the case, and gain some more strength until we get a potential golden cross. And that would be excellent too. We've also got some nice signals here on the Ichimoku cloud to suggest further continuation in the short term, at least, only on the 4 hourly. So I'm quite hopeful with the way that things are looking. At least it's not looking as bad as it was before. The main thing that I would need to see now to really seal its fate is for this weekly to close, and the weekly will close tomorrow night at 12 o'clock. Above this green 50 exponential moving average, and if a closure above there will make me feel a lot better. So that needs to pretty much close above where we are at exactly right now. We are coming up to that resistance right now. Rejections from here would be a little bit sad. I want to see closures above 34,000 just to give it that extra little boost. Hopefully we can move up a little bit further, but I need weekly candles to close above here, because even though I've said, when I started this video, I said that this current bull market, we have closed below here and it's not been too much of a problem, and we've always recovered from it. Previously we have always been above it, and so I have to respect the fact that when we start to close down below it, it does suggest that there could be a bear market, and that's not what I want. Don't want a bear market right now. I don't believe we are going into a bear market. It just time-wise doesn't make sense. Fundamentally doesn't even make sense either. I think we're recovering here from a large retail pump, which is what happens. And there was and that normally marks the absolute peak of a bull run anyway. Retailers coming in left, right, and centre, buying things without any knowledge or understanding, and basically getting wrecked by the people and I suppose the large players who know exactly what's going on, and just taking all their money. That's normally how these things work. So that's what happened here. That's definitely what happened over here, and it is what's happened here to a large extent. But are we going to recover from here? I think we probably are, because time-wise it doesn't make sense for us to peak here. It's just way too early to have actually had a peak and go into a bear market. But I have to respect that this is a different chart than the way that it's it's formed as different to the previous charts. You know, it does look different. It's different. It definitely feels different. But then, like I said at the beginning, you know, the use of derivatives and other instruments used to trade Bitcoin are more widespread now. They weren't really the case before. They are now, so it's going to have an impact on the way that the chart is structured. And so hopefully we can close above 33,700 and we can get a little bit higher for that weekly close tomorrow night, and then we can start to talk about an incoming moon in the next few months. But for the moment, it's all about this weekly closure for me. Even though the daily and the 4-hourly look really good, very, very encouraging, the weekly is the one that lends it gives credence to the bigger moves, and that's what I want. I like the big moves. I like the, you know, I like the X's rather than the percents. So we'll leave it with you there. Thank you for watching. I hope you have a nice day. It's the live stream tonight for Patreon users, so we can have a start to look at some of these altcoins for you. But yeah, hope you have a nice day. Take it easy.